whenever there's changes happening in the S&P 500 in terms of stocks being added to the S&P or removed from the S&P 500, actually is really important to understand from a stock market operator's perspective. And even more important is when they basically add, or sometimes I guess remove, parts of the market. In this case, what they're doing is they're adding an entire new sector of the S&P to the S&P 500. So I guess we're going to have 11 sectors then, and it's called the communication services sector, and it's going to include basically what they're doing is taking the communications sector, which is stocks like Verizon and those Comcast and those kind of names that we all know, but they're now adding things like Facebook and Google to those parts of the market, that sector, which is really, really important to understand, because what that does, it essentially broadens the risk of what used to be tech stocks to other parts of the market. So let me quickly show you here what that looks like. So the ticker symbol is XLC, and you can see some of the names in this part of the market are going to be Facebook, Google, Disney, Netflix, and so on and so forth, and even Under Armour and so on and so forth. And so what that does is it takes some weight off of the shoulders of like large cap tech stocks. But what it does also is by removing some of the Googles and Facebooks from the technology sector, it basically makes things like Apple, which is now like a 14% or so weighting in the S&P, even more so, like probably around 20 or above. So in one sense, it's good that the technology sector is being more broadly spread, but I think it increases the risk even more in large cap tech. So if Apple were to drop, then something like the technology sector, which is what Apple's in, is almost definitely going to drop even more than it did before, where Apple was less of weighting. At the same time, also what it does is, even though it diversifies these things, and I know I'm kind of all over the place here, but it also kind of diversifies the risk. In other words, so now this communication sector is made up of Facebook and Google. So if these large cap, formerly tech names all fall together, which they will because all portfolio managers are allocated to them, and it's not a doom and gloom call, by the way. This just means, you know, if they were to make a strategic allocation, then it's not just tech stocks that are going to sell off the tech sector, but also communication stocks and even consumer discretionary, because guess what? Amazon is a consumer discretionary stock, right? So I just want to give you a quick note on this. And by the way, we are going to be adding the XLC sector to the dashboard today, and we're launching the dashboard to you guys tomorrow, the 26th of September. So make sure to join us in that special webinar. Link is down below or in the email if you received this by email. Launch of the dashboard, big deal. Hope to see you guys there. Have a great day. Talk to you tomorrow.